Hello, everyone. Welcome to my second session of my ThinkorSwim video on stock trading. Um, Today is February 25th. Quick story about how I got into this, just in case anybody wondered, was my last job. We didn't have a 401. My company would contribute a percentage of your salary to a SEP IRA into a Charles Schwab account, and it turned out Schwab would not manage that for you unless you directed them to, and they indicated that they would charge a fee, which is understandable. So I decided to look into doing it myself when a coworker mentioned he did it, and that's what started me on this journey. So anyway, on to today's trading. This is today's SPY chart. I made a few paper trades today and a few real money trades today. Zoom in a little bit here because my first entry was here. I actually did live and paper trade today, right here. I entered today at 10:05, exited some at 10:17 and some at 10:23. So you see I was only in it 18 minutes total. But I entered at 10:05. I like this doji candle right above a pivot point. Held that level, so I entered right here. 10:05. I sold at 10:17 and 10:23. So I sold some right after this candle opened. So probably right in about this range. And the rest at 10:23, which would have been a little bit after this candle opened. So probably right in this range. The reason I sold the second half was because once I sell half and I have profit, you figure I was up 13. I was up about 10% on that the first half of it I sold, or first batch of it I sold. I don't want to let the second part of it go red. So when I got close to my entry price, I did a market sell to get out. I don't care what the chart says, I'm not going to let that go red. So I took a little bit of profit on that. I did that with a real money trade also. I got in at pretty much the same time. I got in at 10:05. I sold some at 10:17 and some at 10:21. So I would have sold about the same time here, 10:17 and 10:21. So right after this candle opened, it started to come down. I sold the rest of it. So I probably did a little bit better on this trade than I did on the paper trade. I also entered at 12.46 at $1.23. This is puts. Sold half at $1.34, which is close to probably about 8%. Sold another one at $1.36 and sold the rest at $1.41. Let's take a look at how that looked at 12.46 for puts. 12.46. We were right about here. Would have entered right about here. Actually right at the beginning of this candle. I liked that it wasn't breaking over this pivot point, nor was it breaking over this 100 simple moving average. So I entered right here, paper trade. I sold half of it at 12.55, which would have been the very opening of this candle. I sold one more near the close of this candle, so about the same price. See, I sold at 12.55 and 12.59, so about the open and close of that candle. Sold the rest at 132, which would have been just after the open of this candle, so about right about this price. This one I sold because I was nearing the 200 simple moving average line. This one I only sold because I was up close to 10% and I wanted to lock in some profits. That's how I play, to be safe, to be conservative. This one here, I actually did this video earlier before the market closed, and this was just done as a just to show another example, doing it live. But the video was too long, so I had to scrap that. So that's what this one was from. I also made a real money trade at let's see what time that was, at 3:46 p.m., which I don't like trading after 2 or after 3 o'clock real money, but I like this entry. I got in at 3:46. I like the fact that we had a doji here. I entered right after this candle opened. It dropped below the pivot point. So I got in right here. I paid $1.50. I sold 2/3 of it at $1.55 at the 350 candle, right at the beginning, right at when this candle opened. I sold 2/3 of it, and I sold the rest a minute later. So yeah, might have been down here. I sold it at $1.51. Actually, I sold that one because it was close to my break even again. I paid $1.50. When that last third of it was at $1.51, I got out. Uh, Not a home run, but I don't look for home runs. I just want a nice little profit, nice little base hit. Occasionally get a double, and I'll be happy. You see some of the candles I look for: dark cloud cover, engulfing, Maribozu, but I don't put that much emphasis on those. Piercing line, hammer, shooting star, and doji. This is a doji. They have a little dot in between them. ThinkorSwim puts a little dot in right at the open and close. Here's another one. Doji just means to, hey, be on the lookout. Doesn't mean to get in. It means something might reverse here, so take a look and keep an eye on it. See a bearish engulfing here, bullish engulfing here. This one here is actually a Maribozu. Maribozu means the open and close is the high and low. There's no tail, there's no wick. You see this here, this is the body of the candle. This here is a tail. This here is a wick. So above the body is a wick, below the body is a tail. Maribozu means there's no tail, there's no wick. It opened, closed at the high and low. I don't buy just based on those, but if a Maribozu happens to also be bullish engulfing or bearish engulfing, it just adds a little bit to it. So something I look for. The thing I really like is pivot points. See a pivot here, pivot here. You see right here we held it. Right here we pretty much held it here. We lost it here. Once we lost it, guess what? It came all the way down almost to the next pivot. Here we did come down to that pivot, which is why I entered the puts here. Let's take a look at Apple. The Apple chart, and I pretty much use the 5-minute chart. On my regular trading monitor, I have the 3, 5, and 10-minute chart up, all side by side. I do look at all three. You see here, we opened just above a pivot point. That would have been a great entry. It's risky, but look at the reward. It could have also went the other way. I don't like entering right at the open. I know some people do, and I know people that are really good at it. I don't like it. I do it occasionally, but it has to be a really good setup. See, we came up to this pivot. You see the size of the body on this candle? It's pretty bullish. Look at here. Body's getting a little bit smaller, and here it's even smaller. It's almost a doji, and we're near a pivot point. When these bodies get smaller and smaller, it means it's losing momentum. You lose momentum at a pivot point, it's a pretty good indication you're going to get a reversal. You're at least going to get some consolidation. You see a big red candle here, that's a pretty good sign you're going to start pulling back. You don't want to enter way down here because you got to watch your risk versus reward. But if you would have waited till it came back up close to here and entered here, you could have rode this all the way down to the next pivot. Which leads me to this. If you take a look here, we have a bullish engulfing candle here. Right near pivot and near today's open. The yellow line indicates today's open. We have a bearish engulfing here. Why wouldn't I enter bearish engulfing here? Well, if you look, we have pivot point and we have today's open. You don't have a lot of room here to move before you hit support levels. From a technical standpoint, your stop out on an engulfing candle is the highest high between the pair that make up that engulfing. So right here, your high was 174.33, so that would be your stop out. A close above 174.33. you would have actually stopped out at this candle. You would have entered right here. So you would have entered at the very low of that candle and got out, stopped out at about the high of that candle. There wasn't enough risk reward. So the other side of it is right here, we were at support. This would be a good entry. Your entry would be about here. Now, sure, you don't have to wait completely for the candle to close, because when you get about a minute away from the candle close and 4 minutes in, you can be pretty sure that it's going to close, maybe 4.5 minutes in, you're pretty sure it's going to close as a bullish engulfing. But if you want to be very conservative, wait till it closes. You enter here. This is your stop area. You're going to stop out. Your low was 174.12, so 174.12, close below 174.12 is your stop out. You enter it here, so you have 174.37, 25 cents of downside. You're going to have a little bit of resistance at this level, but I would have been looking more at this level. You would have had a little bit here, which coincides with your 100 simple moving average. Right here would have been shown a little bit of resistance, and you did. You touched it here and you pulled back a little bit, but then you popped up above it. This one here, and you don't know this at the time, but right here you had 5 candles in a row that failed to break above that level. It's a pretty good resistance point. You don't know it at the time, but if you come out here, guess what? All these candles stopped right at about that level. That level was actually closer to here. So you didn't quite reach it, but you stopped right near it. That level is at about 174.90. Me being conservative, I probably would have put my sell at 174.80, maybe 85. Guess what? The high on that one was 88. The high on that one was 85. The high on that one was 86. I would have been out right here. I probably would have sold some right here and got out of the rest right here. No home runs. I don't look for home runs. I probably made 5% on each of my trades today. Maybe 10%. I don't. Sometimes I'll get more than that. I mean, I've got, recently I've hit 15-20% winners, but that's usually when I sell half and put my stop at break even for the other half, and it continues going up. I couldn't tell you the last time I held my full position for 15-20% win. I don't take those chances. When I have a little bit of profit, I sell it and put my stop out at break even, and if I can get a little bit higher, get to my next resistance point, I'll sell. It's pretty much how I play. Base hits add up. Biggest thing is learning proper candles. Know what a hammer is, know what an inverted hammer is, know what a shooting star is, know what a bullish engulfing, know where your stops are. Do not get into a trade unless you know your target and you know your stop before you enter. If you enter and you don't know what your target is, you don't know what your stop is, you don't have a game plan, and you're destined to fail. You need to know those. This one here, I know my stop out is a close below these levels, below this lowest one. My target partially would have been here, which would have been pretty close to a 1-to-1. Not the greatest, but I would have been looking at this level. So I'm looking at 2-to-1, close to 2-to-1 profit loss, or not profit loss, risk reward. I'm good with that. So that pretty much covers it for today. I'm going to try to maybe do a couple of more during the day to cover a little bit more detail on technicals, and then still do my end of day with the chart wrap-ups. Try to look at a few extra charts. I'm going to cut this video off because YouTube told me the last one was too long, so I'm going to try to make sure that I'm under my time limit. So if you have any questions, put it in the comment section. Any suggestions, any comments at all? You like it, give me a thumbs up. I'll see you tomorrow. Thanks.